Good morning, everyone. This is Daily Trade Analysis with the weekly recap for another week of uncertainty and a lot of negative news from the economic point of view. The primary driver of this shift is a cascade of surprisingly high inflation data, which has forcefully tempered expectations. As you can see, US core producing index month over month and the general US producer came in at 0.90. The previous was 0, and we were topping the estimates of 0.20. So very, very negative news here, but also this concern was immediately echoed by another critical report, the University Michigan consumer sentiment and the inflation expectations. And you can see here, the consumer sentiment preliminary came in at 58, coming down from the 61 previous and also 62, which means basically that the consumer, it's growing pessimism about the economy, which could in fact future spending. And this is what all is about. Spending from the consumer, it's holding the entire US economy. In the University Michigan year inflation expectations, we have a spike in both 1 year and 5 year inflation expectations from the 4.5 and 3.4 to 4.9 and 3.90, everything above the forecasts expectations from the market. So as you can see here, we have a lot of negative economic data. And this is why the Federal Reserve basically is saying that a lot of Federal Reserve officials are saying a hawkish shift. But basically, for example, Governor Mussalem delivered a direct message stating that tariffs are clearly now feeding through the inflation and that the current state of the economy does not support a large half-point rate cut. Also, Mary Daly echoed this sentiment, noting that a large cut next month doesn't seem warranted. Everyone's looking for September rate cut, and maybe not only 25 basis points, but maybe 50. But all the Federal Reserve is pointing towards is basically saying, no, we need a gradual approach to policy normalization. And apart from all this news, everyone was waiting for Friday's meeting between Russian President Putin and US President Trump. Basically, there were significant developments on this meeting, this high-stakes summit in Alaska. But the meeting is now concluded, is basically optimistic but with vague statements. Both sides reported making significant progress and agreeing on many points, but no definitive agreement or deal was announced. Again, Trump's comments suggested that a framework for peace is close, but that the final decision rests with Ukraine, stating that a deal is near, but Ukraine has to agree. Maybe a new mineral deal? Who knows? But basically, the theme of international relations, it's finished. It's these tensions. President Trump announced that he will be setting new tariffs if this deal fails. But not only that, also Trump announced that he will be setting new tariffs on imported steel and chips as early as next week. These tariffs on chips would start low but eventually become very high, quote unquote, creating significant long-term uncertainty for the critically important semiconductor industry. We are going to see that on the charts. We have Nvidia. This is a direct and targeted action against this US technology company, Nvidia, that represents a significant escalation in the tech trade war. This move could have a material impact on Nvidia's revenue and send a chill through the entire semiconductor sector. Rival chipmaker AMD confirmed that it has successfully received export licenses to sell some of its AI chips to China. And finally, Intel. It's unbelievable. Basically, Trump administration is considering using funds from the CHIPS Act to take a direct equity stake on Intel. Unbelievable. Let's move into the charts to see how we ended up the week. The first thing I would like to show you is how the market expected the CPI and PPI numbers. Look at this volume. Volume on both Tuesday and Wednesday, we were pretty high, but then we failed miserably. As you can see here, we have a red candle on the week, 0.53 only, but this is starting to, with two dojis on last 2 days, and let's change to the weekly to really see. Look at this doji. We got a bullish engulfing candle last week, and the prior week was red. So there's certainly a lot of people that is buying late, maybe. But we have on the daily, we are starting to see this hesitation up here. So this was the first sign. We reclaimed that line, but we are now below again 24,000. On the 1 hour chart, this is pretty common, I would say, in which we need to see where the market is heading. We have this kind of trend right now, and we are only being held by this 1 hour bullish fair value gap. And usually this 1 hour becomes a runner. So I would start seeing, I'm going to start looking for more basically downside. I said that last week, this was a pretty big surprise, pulling back 4% only to basically gain it all. But if you like patterns, we are starting to see this kind of flow. And this 1 hour it's trying to hold the price action. But on the 1 hour, I wouldn't bet a lot of things. We have this pivot, that is, we are now below that price action, and we have a lot of people that were buying late on this reclaim. A lot of shorts were squeezed, and now we are also starting to trend a little bit down. This is only 1 hour, this is only 2 days, but the horizon in terms of tariffs, in terms of CPI and inflation expectations is not good. So I would say there's a possibility to basically drop 4% in the rest of August. I would be prepared for that. First thing I would look forward to on Monday was to basically how it reacts to this pivot and this fair value gap. If we continue pushing, let's see this spot. But if we don't see anything like this and we start dropping, oh boy, we have to really open our eyes to see the daily. And the first spot would be the 50 moving average, the 20 moving average, the purple line that is currently sitting at 23,483. And the next one is at 23,000, the 45 EMA. So, and then we have the 200 really down here. This kind of drop would basically be pretty interesting. Again, the 1 hour is key. We have low time frame giving a little bit of signals of struggling. It's struggling to hold. We have RSP basically trying to push higher. We have a lot of indicators that basically momentum it's falling. The trend's still high. We have almost 53% of stocks above the 200 DMA. This is a healthy market, but we are so overbought that the trend and momentum are really not pushing higher. As we saw earlier, we reclaimed this pivot. We pushed higher, so price action was higher, but look at both trends in terms of stocks. Both trends are pushing lower. This is a bearish divergence on the indicators, on the trend and momentum. So be careful with this, because it looks like it is preparing to consolidating up here to turn around again. I don't see this market going higher again. It was quite surprising to build all this, but this might be basically sell side liquidity. There's a lot of things up here. There's a lot of people that can be destroyed up here. Let's see what happens on Monday. All this weekend is going to be talks about Russia and US talks, and we need time to digest, but be careful next week. I will be looking for signals and signs of exhaustion. That's what I will be looking for. And these kind of pivots are really key. The first pivot, it's 23,600s. More or less, this zone is going to be key. And I think that would be the first step in a bearish market. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this weekly recap every Saturday. So if you are new, thank you, welcome to the channel. And as I always say, be patient, be disciplined, and manage your risk always, 24/7. Rest during this weekend, try to do your homework, do your own stuff, and come fresh on Monday. Have a nice weekend and see you next week.